Let's look at 4 stocks that Warren Buffett has never sold and is buying more of, and learn why he decides to hold onto these positions in a year where he is starting to make major sell-offs in the market. As we know, Warren Buffett is one of the most respected and intelligent investors of our time, and learning about what stocks he finds attractive can be a great investment strategy for the future. The first stock that Warren Buffett has held onto is American Express. In fact, Warren Buffett alone owns 21.76% of all American Express and has held onto his position since 2012. Unlike Apple and some other stocks in his portfolio that he has started to sell off in the feeling of a recession coming, he has held onto American Express as it continues to soar into all-time highs. American Express offers a whole range of services that Warren Buffett has liked to invest into in the past. One of those services being credit cards and business cards for individuals and businesses. Credit cards are one of those golden business strategies that Warren Buffett has been investing into his whole career. Along with American Express, Warren Buffett invests in MasterCard and Visa, the two dominant payment processing networks that work with companies like American Express to provide these credit cards. Warren Buffett loves credit card companies because they are almost always profitable. A credit card company can generate revenue from high interest rates of 20 to 25% on cash that hasn't been paid back yet. They can also make money from the transaction fees and can make 1.5% to 3% off every single transaction of the million of transactions that occur. American Express also offers banking services, a government-protected industry that is able to make consistent returns. Banks are able to loan away money and collect steady and reliable interest from these loans. These revenues are seen in American Express's revenue statements after every quarter. You can see that American Express has been consistently able to build its revenue over the last couple of years.
American Express still had two-thirds of the market after 60 or 70 years, two-thirds of the worldwide market, while charging more for the product than these other very well-known competitors charge. Anytime you can charge more for a product and maintain or increase market share against well-entrenched, well-known competitors, you have something very special in people's minds.
American Express also does not have that crazy of a valuation, with the PE ratio being only 21. These factors have been one of the main reasons as to why Warren Buffett has decided to hold American Express so long. He saw a company that had good fundamental reasons to grow its revenue, saw its growing revenue at a low valuation, and decided to buy. These reasons helped Warren Buffett make an astounding 448% off of American Express since he first bought it back in 2012. Let's take a look at another stock that Warren Buffett has consistently held and grown to one of his largest positions since 1988, and that is Coca-Cola. Warren Buffett initially decided to invest into Coca-Cola due to its strong brand recognition. It's the drink of choice and everybody knows, grab a Coke. But beyond the outside brand of Coca-Cola, the fundamentals show great results as well. Coca-Cola has had consistent cash flow along with revenue growth over the decades that Warren Buffett has held it. Another great reason is that Coca-Cola's dividend was a 3% dividend and is one of the biggest dividend payers in the industry. Warren Buffett also noticed something about Coca-Cola that most average investors would miss. It is a super easy business model. The core of Coca-Cola's business model is simply to just sell beverages. Beverages have always been high in demand, and with their long line of products, it is easy for Coca-Cola to appeal to any audience of beverage enjoyers. Another important reason for why Warren Buffett has invested so heavily into this product is simply because he enjoys the product and will drink cherry Cokes regularly.
I drink probably 5 12-ounce Cokes a day, and that's about 700 calories. I've been doing it more or less all my life. I can't imagine anybody that feels better than I do.
When investing in consumer products, it is important that you yourself could actually find the product useful, just like Warren Buffett with Coca-Cola. Warren Buffett has made an average return of 92% off of Coca-Cola stock, with most of his investments being made around 2012. So to summarize why Warren Buffett found it so attractive was due to a strong brand recognition, a product he actually enjoyed, and the strong fundamentals that had left Warren Buffett to still hold Coca-Cola today. Coca-Cola is trading 10% lower from all-time highs and could be a good opportunity to buy stock in it today, as Buffett has not been afraid of this 10% drop. The third stock that Buffett continues to invest in is actually a stock that he is down 7% on over the last couple of years, but one that he continues to hold.
Last week, Berkshire Hathaway spent more than $4.5 billion to buy 91.2 million shares of Occidental Petroleum. Buffett purchased the entire stake in just 1 week.
And Warren Buffett continues to invest into it due to his belief in the future of energy. Buffett views the energy sector as an important part of the global economy, especially with the two wars that we are undergoing right now. Warren Buffett has faith in Occidental Petroleum's ability to grow and considers it a strong value investment, even with the volatility that can come with energy stocks. He decided to invest in Occidental Petroleum as opposed to a different energy company because he admires the CEO, Vicki Hollub.
Vicki Hollub, she's an extraordinary manager of Occidental. She knows what happens beneath the surface.
He believes that Vicki has an intentional and strategic plan for the future, and she is the reason he continues to heavily invest without taking full control of the company himself. The next reason Warren invests in Occidental Petroleum is due to its ability to reduce its debt in 2024. One of the reasons why he has been investing so heavily in 2024 alone. And finally, he's investing because of the attractive valuation. Occidental trades at a lower price-to-earnings ratio compared to the broader energy sector, making it an appealing value play. Despite recent underperformance in 2024, its fundamentals suggest significant upside potential. That is why Warren Buffett has still held and continues to grow his positions even while being in the red 7% on this stock today. The last stock I'm going to look at today is a more recent purchase of Warren Buffett's. That stock being Chubb Limited, and unsurprisingly, Warren Buffett has decided to invest heavily into another insurance company. Chubb Limited is an insurance company that is able to have steady revenue and underlying profits like other insurance companies that Buffett is heavily invested in, like Geico, that he owns 100% of.
Insurance is the most important business at Berkshire. I'd been in the business when he came in 1986. I first went to Geico in 1950. We first bought National Indemnity in 1957.
One of the main reasons that Buffett decided to invest into Chubb Limited was to diversify within the insurance sector. He understands that everyone needs to have insurance, and the data allows for insurance companies to make a steady profit no matter what they are insuring. Chubb's long-term growth is one of the main reasons why Buffett decided that Chubb Limited would be a solid investment, even willing to buy in all-time highs, thinking its future is still strong. If you guys enjoyed this video, my goal is to hit 1,000 subscribers by the end of the year, so please subscribe and I'll see you in the next video.